talk about dividends, reinvestments, and just dividends in general. Uh, I know I show a lot of charts, but the charts don't always tell the whole story. What some of your investments do is they have dividend reinvestments, and that's kind of why I stick to following the charts here. What's going on these because they don't show dividend reinvestments. And then the small cap value fund, it does dividend reinvestment or dividends. It pays out dividends every quarter, so you might see a dip. For example, in the last 3 months, we had a dividend reinvestment on the 14th. So right here, looks like a big dip in the market, but what happened was you got a big dividend payment at the end of the year. Usually get a good chunk of change, and what happens is you can take the money in as cash and put it in your money market account, or if it's a non-IRA account, you can just have that dividend payments taken into back into your account. So you can just recollect dividends, have an investment, just collect on the dividends every quarter, and then see what it's doing in the meantime. See if it can make you money as well. But a big drop like that might tend to think, well, Dave says buy on the dips. It's yeah, it's down, but what happened was it's been also reinvested. So you're basically already buying at this lower price. So when it's at this price and suddenly drops to this price, really you'd have to take that and move it up to here, and this is where you would be somewhere around here in that chart. So this fund actually is doing pretty well after having a uh, dividend payout. So again, what most people do is they just reinvest it, just keep on letting that thing grow. But you could just be taking out the dividends and say, no, I put 10 grand in this thing, and I'm just going to take dividends for the rest of my life on this account and see what it can do in the meantime. So when I'm saying to buy on the dip, you should know your fund to know if these are dividend payouts. And Yahoo used to have a D down below wherever the dividend payouts are, and I don't see that anymore. If I go to year to date, at the end of the month there's always a dividend payout. So you see this drop here in April or into March, that was probably a dividend payout, and then at the end of June would be another drop where there's a dividend payout. Into September there would be a dividend payout somewhere around here. Again, look at if you would have bought here, that would be a good investment here, buying on those dips. So I'm not saying don't buy on the dip, I'm just letting you know, just because you had this big drop, it's not because the stock market tanked or anything. It was a dividend payout. So watch for dividend payouts. You can go to this here to read more about it. I like to go find information about investing through this website here. We'll talk more about what reinvestments are, or dividend reinvestments. So you have typically two types of options at the end of the year, which would be capital gains and then dividend gains. So you can go do your research on capital gains versus dividend gains, but bottom line, I was just trying to show how the charts react. Where was that? This doesn't, again, necessarily mean that there was a big crash in the market, rather just a payout in dividends. So again, my leading factors is, yeah, the chart's down, but I'm also gonna, if I'm doing a value fund, I'm probably gonna see if the Dow and the S&P are down, and then also go into my holdings. And then I'll click on my holdings, and in this case I don't have the holdings as I did in a previous video, so I use my Fidelity Value Strategies funds, and I go check out its holdings, and if the dividends are down, or sorry, if the stock is down, if all of those are down, that's my key to buy, which I'm not buying because I actually already bought this on accident when I was going to buy the growth funds. So why I'm not going to buy more of that. Plus, it's not down that bad, really. If I take a look at that chart, it's down. So I made that buy on the 14th, so it's down around here, and I'm down on a low, and hopefully next year maybe we'll see a strong bump in the first quarter. We will have earnings reports mid second week of January. Uh, Ironically, if the companies are making money, the government's not going to like that. It wants the companies not to make money, so it'll be a double-edged sword there. You invest because you want the companies to make money, but then we're going to get a slap in the face if they make money and have more talk about interest rates going up.